Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi, everyone. Today is Friday, September the 5th. We have the employment numbers ahead. We got some very interesting positioning, and I think it is because all that seasonality noise, is positioned the traders short. And so we have the possibility of a pretty good size squeeze today if price action does not follow suit. There's a new gamma wall that is showing up intraday, sitting at about all the way down at 6,475. That's the fade I actually expect if things move in the general direction, but it could get very squirrely in the near term. So I want you to be really careful with the price action today. The last 30 minutes of the trading day yesterday in the E-mini S&Ps looks like we've got a high near 6,512. Might be a little bit of a rock fight right there, trying to hold that zone. If not, it falls into the low of that candlestick, which also happens to be a gamma line that is second to the call wall. So my suspicion is it sits in this area if it is going to rise to the north. If not, we're going to have the reversion to the high volume node over the last couple of days, and that gives us this area around 6,475. At this juncture, it is showing breakout formations. Notice 30-minute candlestick. We open above it and we hold the low of that opening candlestick in general. That gives us the opportunity to take the price action long into the call wall in the overnight. Now, a little bit of tricky trading, and I would say based on trend and momentum, it's a B setup, right? Because we are seeing the backdrop, but that trade into the overnight, if you just took it into old resistance, which is where it's battling right now, it would have been a good trade. Now we're setting up again. Take a look at momentum. It's down. Take a look at trend. It's up. We've got a cross current and the backdrop of all of that thin volume that moved us up into the end of the day. Dealer positioning is short, but that could lead to a pretty sizable squeeze if they break the call wall. Okay, so you want to be really careful up here. I expect an exhaustion move that runs the traders who are short out of the position and then a flush. So you're going to have to watch for that. Above, if that is the case, traders are going to position themselves long above 6,531 into 6,550. That's my supposition. Sticky markets here, folks. I would say be very careful. Be very, very careful today, especially if you've got real money at work or you're working on a combine that's not doing awesome. Okay? Now, let's take a look at the NQ. Same sort of thing, although their largest volume candlestick was the open of the range. Now, Broadcom reported, well, I don't know how they reported, but the traders really did like what they saw. And so this could be another reason that price action's pushing up. But again, 30-minute candlestick, the last closing candlestick of volume-worthy formations, puts us with support at that high at around 23,680. The opening range candlestick breaks out above it, fills in the gap, and then runs. Again, not a bad setup if you're looking to run it into prior volume events. And so what that tells us is that we've got this zone up here as a topping formation potentially. Now, what happens with the topping formation when you have bullish VWAPs, bullish moving averages, but negative divergence, which is the MACD rotating over? It means they'll find support and then bounce. I don't know that this is a breakaway, although we do have this news coming. It could take us to the top of this Jackson Hole box. Boy, have we talked about that 10 times to Sunday. My goodness. So it's going to be something to watch. The top of that box, let's take down. Nope. Let's move this line out. Right? Because we've got the high and low of the last 30-minute formation, 23,600. The fade into that zone gives us a possibility of a long. Value area high, 23,565. Value area low, well below. But you can see institutional formations are looking bearish. And really, if the jobs number comes in weak, we do get the likelihood of a cut to the rates. But that's not a good sign in the broad market overall. And so this is why we have this very big, nasty patch and a lot of thought in here. So my thought is trade from support to resistance, or resistance to support, resistance to support. If the trend takes over in your favor in either direction, just walk the trade down in the flow of motion. Nothing else that we can do there but that. All right, let me hide this as we go to the YM, because those numbers are always wonky. This has already completed its topping formation, right? Notice the difference. These guys are not moving in the same direction. Last 30-minute candlestick of the day. Take a look at what happens. The low of it, we just broke 45,658. The high of it broke above, but what we have is that statistical normal space where 85% of the time we break above and below. And so what we're staring down here is a breakdown of the formation. Now notice, you could look at this chart and say, okay, I opened up inside of the value area, and so I could take a short at the top of the range with a target here. Now, the problem is it could easily run your stop, very easily. So if you took the trade at 45,709 and you use the prior heavy congestion as your stop, you're going to move out and get stopped out with a paper cut, right? Now, you might look in hindsight and go, well, the trade worked out. Yeah, because we can see that in hindsight. You can't just say, hey, I'm going to, do something crazy and just leave it on there. You could have done something equally bananas and given yourself a 100 tick stop, but that's $500 of risk, right? For only $50 of reward, essentially, in that space. So if it breaks, you should be gone, right? It's just not worth the risk from that space, and then you're on the back foot and blah, blah, blah. The second thing that you could do is essentially say, hey, if I lose the low of this 30-minute candlestick, I'll short here. I'll put the overnight trade to be short here at 45,658 with your stop, again, 50 points wide, and your target will be, let's see what that target is. I'll have to look here to the left. Yeah, the target would be, Okay, the target would be this one. And I'll tell you why in 2 secs. Oh, come along, Fred. The target would be this candlestick. It would be Friday's low into this space. So the target area would be 45,549, which is a nice risk to reward, right? How do you know where you're looking? Go to the high volume candlesticks on the day. Remember, prices move into spaces where everyone competes, and big money normally gives us those formations. Now, could it be that it still stops us out and goes in for the 50-point loss? Yes. However, breaking the range tells us, that would be the next most statistically logical space to position the target. All right? Okay, let's go to Bitcoin. If for happenstance, this continues to fade, the next fly in the ointment, as it were, below 45,549 is 45,447, and then 45,400 or so. Big volume pocket right here. The Jackson Hole number is 45,500, just as a note. All right, let's go to Bitcoin. And let's see what the gamma lines are here. Whoa, that's very interesting. So, all right, so here's what's happening. In the backdrop, if interest rates come in, gold is likely to rise because interest rates come in. It's not going to make the dollar as strong. And so we could see another influx into Bitcoin. If the jobs number is good, who knows? It should fade. If the jobs number is bad, it's going to very likely bounce because it's going to tell us that interest rates are going to move in that space. The call wall today is providing support at 112,469. Put support well below at 107,000. So these guys have really positioned fairly well using this. Notice prior resistance at 113,400 or so is giving us the topping range in this formation. Very sideways moving averages. Could you take the breakout? Yes. You maybe have to do a buy stop here and then run it up for $1,000, maybe $800, and then cut the cord. This is a very interesting chart. Could be a two-way street. My thoughts are fades, going to be buy zones, 110,000, good buy opportunity. I would not position a sell order here. It would be more of a buy stop that runs into the heavy congestion of past days. Notice they're all clustering in this area. Look at the volume profile. It's very compressed. So the breakaway could be extremely steep, which is why I would suggest a buy stop here with about 500 points of risk. And that should, give us that 114,000 edge. That is a gigantic call resistance edge. That is very big. All right. Oil. We are in the V contract. And this, of course, this fade down here is because of OPEC saying that they're going to boost output. A lot of arguing here, right? Remember, this chart is in backwardation, meaning the forward contracts into the future are cheaper than the current contracts here. That's probably going to work itself out as the V contract moves into deeper Support, high volume zones. We're sitting in this box. I'm going to delete all of these drawings. Simon the drawing gal. All right, and the high volume candlestick of yesterday, 10 a.m. Very strange. Not at the close, not at the open. We have Europe that gives us this big box here with the high at $63.74 and the low, look at the battleground here, the low of that high volume candlestick bringing sellers in. To me, this looks like a breakdown. This looks like a breakdown. If the jobs number is weak and we've got OPEC telling us that we've got downward flow, easily we move to 62, right? We are out of the pocket. If, per happenstance, we get above 63.51, that could send us back into the high volume node where all the point of control sits, and that's $63.99. But this, to me, looks like a breakdown, right? Accumulation, distribution. And so the first line that they're going to try and hold is this low, but it doesn't really have a ton of volume sitting on it. I mean, it has some, for sure. So you want to pay attention to this if you happen to go short on the bounce, right? Pretty steep moving averages, and momentum is negative, but not dramatically negative. All right, range expansion to the south. Let's see what that gives us. It gives us this line in the sand, which is the gamma line at $62.50. I'm okay with that. Yep, I'm okay with that. $62.56 or so. And then below that, we have a high volume candlestick formation at around 62.22. Yep, and that would be where we would walk down. Now, of course, if it goes further to the south, you know what to do. When in doubt, zoom out and look to the left for where the price action begins to hold some sort of pressure event. And that looks like it could be all the way down at 61.65. All right. Let's finally take a look at gold. Gold in a sideways pocket. This is one of those spaces where it should have another pop to the north if indeed the jobs number is weak, because then that will say, hey, we're going to have an interest rate fade or an interest rate cut, and that is going to drive the gold chart back up into its highs. If not, if we lose 3,600, where the call wall is sitting right now with that big fat round number, 3,581, 3,562, 3,554. Right now, it is in accumulation, right? Accumulation. And so we're going to look for distribution to the north, or distribution to the south, right? Could see a liquidation event here, but we are definitely in accumulation mode. Also, very, very messy chart. Very messy chart. Some days, listen, here's the thing. Well, here's what traders forget. It's okay not to trade. It is. It is legitimately okay not to trade. A lot of us say, oh my gosh, I got to find a trade. No, you don't. You don't really have to find a trade. What you can do is say, all right, I got to watch what's going on, and when it fits my strategy, I'm going to take the trade. And so many of us forget that we are in control of where we press the buttons. Okay, last 30-minute candlestick of the day is right near our $649.12. The low, the low of yesterday's 30-minute candle, which incidentally is not carrying a lot of volume. I'm going to take, do I want to take that one? No. I need to build another line, one more line. Let's look at the 30-minute low of the last closing area. That's $647.81, right? Rotate it down. We'll see what gives, and price action will be very, very nice. Deep dips are still buys. Deep dips are still buys. But the question is, have we caught the traders flat-footed, thinking we were going to have a fade, and now they're all in this squeeze? Is there enough power in the market to push price action back into the VWAP near $642 or the point of control near $643.90? All right. Hey, interesting charts. Embrace them as interesting and just manage the risk. Write down your setups. 1, 2, 3, 4. Here are the things that I want to look for. If all of them qualify, A trade. If 3 of them qualify, B trade. If 2 of them qualify, C trade. And if only 1 qualifies, don't take the trade. Nobody wants a D, right? No, nobody wants a D. All right, everybody, take it easy. I'll see you on the streams.